Good morning or good afternoon, depending on where you are. It's your boy, Sean McLaughlin, Options Sean on Twitter. This is the weekly All Star Options Jam session where we review any action that has happened in any of the options trades that we have in the All Star Options service, positions that we exited either at a profit or loss, or maybe we made an adjustment to, or maybe we changed a stop loss to. Um, but before we get into any of those charts, I just have to drop the old disclaimer here to make the lawyers happy. They want to make sure that you understand that everything we do here is for educational purposes. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. All right, so let's take a look at the big picture here to set up what we have to talk about. First of all, here's the S&P 500. This is a chart as of yesterday's close. It doesn't show the big reversal we've had today. Pretty ugly trading action, all things considered, especially considering that NVIDIA earnings came out last night that everybody was excited about. Stock was trading very high in the after-hours session yesterday, but it's given up the ghost last I checked, and the S&P is now down on the day. Furthermore, here's the VIX chart. This VIX is also reversed higher. VIX is trading kind of near 17 right now. So I apologize for these charts being a day stale. We like to work with daily charts here. But it's important that we talk about this because it sets up the stage for what's going on in the markets. Let's go back to the S&P chart real quick, especially when you consider that we just rolled over today. That just adds further credence to the fact that we are in a difficult market right now. The market that we had since this winter, leading into, let's say, the end of July, was a market that was very favorable to taking on risk, putting on long positions, being aggressive, and we were rewarded for that in a lot of positions that we trade. Unfortunately, many positions that we have put on this year, we still have on the books. And as you can imagine, the pullback that we've seen here in the broader market has been challenging for many of our open positions. Now, we're still sticking to the trade plan. That's why we put a trade plan together in the first place. But, you know, these periods of giving back open profits are never fun. And of course, we've had some positions we've had to exit. Risk management is job one. So when we have positions that aren't doing what we hoped they would do, and they've tripped our stop loss levels, no matter how we feel about the position, we need to take action and get out. That's rule number one. If a stock breaks the level that you identified before you put the trade on as a significant level that you don't want to be in anymore, if the trade gets there or if the stock gets there, you have to honor that rule, or you have to follow that process. So first example here is MicroStrategy, ticker MSTR. Now, you guys know we put a number of trades on recently on the thesis that Bitcoin was about to break out. Well, Bitcoin had other ideas. Bitcoin rolled over on us. And so a bunch of trades we had tied to that thesis have all busted, including this MicroStrategy trade. This was a June 450, 550 bull call spread that we put on August 14th. And when Bitcoin fell out of bed, it took MSTR with it, as we would expect it would. And so we got out of the trade a week later on August 21st. Now, the good news is the loss happened fast, right? These are options that we had almost a year until expiration. We'll say 10 months to expiration. So there's a lot of time to go. And this original trade might eventually work out, maybe. But in the meantime, we got to protect our risk. We got to protect our capital and manage our risk. And we got to stick to the plan. And the plan was, if it broke down out of bed, broke these lows here in June, then we had to get out, and we did. But the good news is that we didn't suffer that large of a loss. We paid $25 to get into this spread. We got out for $17.90, almost $18. So remember, when we put defined risk trades on, we always, or at least I always, size the position in such a way that if I lost 100% of the premium that I paid for that trade, that's okay. That's well within the realm of an acceptable loss for my portfolio. I don't want to lose 100% when I put a trade on, but it does happen, and it happens quite frequently actually, but that's all right because I've sized the position such that for my whole portfolio, the most I'm going to lose is no more than 2%, usually even less. And this MicroStrategy trade was no different. But in fact, we lost far less than 100%. So it's really just a flesh wound, just nothing to be worried about. We took a loss and we moved on. Same story with Aflac, long call. Well, not the same story about the thesis of why we got into the trade, but from a risk management point of view, similar thing. We got out of it relatively quickly. We got in on August 8th. We bought the January 85 calls for $1.20. When we exited on the 23rd, we didn't take a full loss. And in fact, I got, what did I get? I get 40 cents on the way out on these Aflac calls. So, hey, could have been worse. We'll take it, right? There's still money to be saved there. That 40 cents, that's real money. That's $40 per contract, depending on how many contracts you had on. That's real money that could be deployed somewhere else. So not a full loss in Aflac. We'll move on. And then, of course, with Apple, boy, Apple was looking so good. My thesis on this trade when we got in back on June 9th was this thing was no doubt going to break and exceed the $3 trillion market cap, and it was going to do a $200 roll. Well, guys, on this ugly little candle right here, this little reversal candle, we got so close to 200. I think it was like 199 and something. We were so close to that $200 roll, and everything was looking great. But Mr. Market had other plans for us, and unfortunately, it rolled over, and we got stopped out. August 18th is the day we got out. What did I exit this trade for? So this is a trade that we got in for $675. I got out for $255. Again, not a total loss, and that's fine. If we suffered a total loss, that would have been okay. But we didn't suffer a total loss. We got out at $255. We'll take it. Okay, moving on. Now, a little bit of silver lining here, a little bit of good news. Okay, Marathon Digital Holdings. Now we had a trade on this, a kind of a add-on trade a couple weeks ago that we got quickly stopped out of and for a loss, and that sucked. But this was a trade in Marathon. We'd actually been in a little bit longer. We got in on May 31st. We bought January 14 calls for $1.85. But guess what? The good news on this one is that on June 23rd, which is during this run-up here, the early part of this run-up right here, we were able to sell half of our calls for a double, which was the plan that we had from day one. The plan was if we had an opportunity to sell half of our position at double what we paid, we would do so, taking all of our original risk capital out of the trade. Well, on June 23rd, we got that trade. We were able to sell half of them for $370, and now we had a free ride, a risk-free trade, and it was looking great. But then, as we talked about, Bitcoin rolled over. Stock had another idea, and I had moved up our stop loss on this trade. I moved it up to 12. I believe it was 12. Yeah. As the place we wanted to exit the trade if it couldn't hold 12, and I alerted you guys in the live chat, and I think we talked about it on the last video. Anyway, it closed below 12 and we got out. But hey, the good news is we were able to sell those January 14 calls for $2, and that $2, guys, ladies and gentlemen, that's pure profit, because remember, we had taken out our original risk capital during this run up here. So anything that we sold those remaining calls for, anything at all that we could get for it, would be pure profit. And on the 21st, when we sold those remaining calls, we got $2 for them. So this trade goes in the books as a profitable trade. Doesn't look like it, but thanks to our exiting half on the way up during this run up, we were able to make this trade a winner. So a small silver lining, a small piece of good news in what has otherwise been a challenging tape. So how are we dealing with the challenging tape? Well, that's a good question. We'll come back to this Boeing in a second. How we are dealing with this tape right now is, you guys have probably seen me on the morning show. We're talking with JC and Straza in a variety of other videos here on Stock Market TV. We've been talking about how right now, at least for me, as the options trader of the group, I'm looking for positions or trades where I can sell premium, put on more or less delta neutral trades. I'm not betting on a big move in either direction, up or down. I think the market is setting up for a lot of sideways chop, at least for the next 4 weeks or so, give or take. I don't have a crystal ball, but it feels to me that the next 4 weeks or so are going to be more or less choppy and sideways from a big picture point of view. And so I'm looking for delta neutral, short premium option trades to put on where I can collect premium betting on sideways ranges. And so if you want the details on these trades, obviously All-Star Options subscribers get them emailed to you when we publish them. We get them in our live chat. If you're not a member of All-Star Options, shoot us an email and we'll get you hooked up. But anyway, I'm using 3 vehicles right now to express this sideways thesis. Microsoft is one of them. Semiconductors, the ETF for semiconductors, that's SMH, and healthcare, XLV. All 3 of these instruments, I feel, are good candidates for some sideways action. And so we've put some delta neutral trades on. Again, if you want the details in those trades, if you are an All-Star Options subscriber, head to our blog and go to the members section. You'll find all the details there. Or head into our live chat room, the Telegram chat for All-Star Options. You can get the details there. Lastly, I want to bring up this Boeing chart. We're still in Boeing. This is a bull call spread, November options. So November 240, 260 call spread that we paid 660 for. Unfortunately, today, this is a misprint. I apologize for this. This should not say entry on 824. We got into this trade on, when did we get into this trade? We got in on August 4th, not the 24th, August 4th. So right in here. But anyway, this trade, this stock, this afternoon or this morning, excuse me, traded below our risk management level. Our risk management level is 220, if I recall. I wish I had the chart here in front of me. I apologize. 221, I believe, was the level. We traded below it today, intraday. Now, I don't exit trades on intraday noise. You guys know this. I don't get out intraday based on intraday noise. I want to see a closing price below my risk management level. The closing price, at least as a swing trader, the closing price is the most important price of the day. You may disagree, but that's how I view things. That's my worldview on swing trades. And so I'm waiting to see how Boeing closes today. If it closes below 221 and it remains there at the open tomorrow, meaning we didn't have like a big gap back higher, then I will be exiting this trade tomorrow. So stay tuned in the Telegram chat for details on that if we do get out. All right, everybody, that's all I've got for you this week. I wish I had better news for you. But hey, I think we got some trades on the books now that are going to help smooth things out for us a little bit, at least over the next few weeks. So stay tuned. If you have any questions, as always, shoot us an email, info@allstarcharts.com, or me personally, Sean@allstarcharts.com. Either one of those addresses will get to me. Have a great weekend. I'm going to have a great weekend. I got 2 great concerts coming up at Red Rocks here in Colorado. Very excited. Hope you guys have a great weekend as well. We'll talk again next week. Trade them well. We'll see you next time. Bye-bye.